Hello, everybody, and welcome to Commodity Culture, where we break down the commodity space for both new and experienced investors. My name is Jesse Day, and before we get started, standard disclaimer: nothing here is investing advice. Do your own due diligence. And today's guest is an economist, author, and the CEO of Monetary Metals, an investment firm that is unlocking the productivity of gold. It's Mr. Keith Weiner. Great to have you back on the show.
Thanks for having me back.
Yeah, great to have you back once again. I always enjoy our conversations. And I want to start with the BRICS currency and a tweet you made in response to Jim Rickards saying that this new currency will be anchored to gold, but not redeemable. You said, "So it's a promise, not by the untrustworthy USA, but by the trustworthy Brazil, India, South Africa, Russia, and China, whose people don't believe in their existing currencies." So obviously, we don't have confirmation on exactly how this currency will work, but if it's not redeemable, it obviously brings the entire thing into question. So could you expand on your thoughts as we see the BRICS currency today?
Well, a little bit of sarcasm there when I said the untrustworthy U.S. and the trustworthy. So several of those countries have capital controls, which generally means that their people are desperate and, in fact, risking their lives in the case of some of them to dump their currencies and get dollars. But their government locks the door on them and doesn't let them do this. Meanwhile, the rest of the world is presumably going to buy this currency. It kind of reminds me of, I remember reading an article on the politics of light rail, where they go to the voters and, some city and say, we have to put in light rail, and, we want you to agree to sign up to, $50 billion in debt, for a town of 100,000 people or whatever. And you do the math. It's like, that's insane. And what's the politics of it? Is people are stuck in traffic looking at all the other cars thinking, well, I'm not going to ride the light rail, but all these other cars will be out of my way because all those people will be riding the light rail. And I think that's what's going on here is the gold bugs are kind of excited that means that other people are now going to invest in this alleged currency and bid up the price of gold, which is, it's a pleasant fantasy. But who in the world is going to send their gold to Putin, let alone Modi or Lula? And who's going to send their gold to Xi? So it's illegal to bring gold out of China. That's the state of things, and yet people do. They risk their lives. There's all kinds of loopholes that people exploit to get their currency out and get their gold out. And that's the thing of it. Now, my point about if it's not redeemable, what is it? It's the promise of a government saying we're going to maintain a peg of some sort. And the problem is, pegs have 100% track record of always failing. In the end, every peg breaks. Because when the market moves against them, what are they going to do? Defend it to the last, dying breath? Usually they defend it to a point where it's of ludicrous, and then they abandon it. And then that's it. Then they say, well, now the new peg rate is, and, there's no credibility. And anybody who trusted it, they're thinking, oh, that each unit was a gram of gold or whatever. Well, now each unit is half a gram of gold. You just lost half your gold. So anybody who wants gold is obviously not going to invest in it.
Yeah, interesting. And I do not see a lot of gold bugs proclaiming that they can't wait to get their hands on the new BRICS currency as soon as it comes out. You're right. It's more of a, I hope this bids up the price of gold and it goes to the moon. So that totally makes sense to me.
Yeah, they can't wait for you to get your hands on it to bid up the price. Exactly.
So last time we chatted, we did an interview on the VRIC channel, and we had an interesting conversation about the link between climate change fanatics and communism. And you recently stated that socialism is not economics, it's envy. So could you expand on that concept for us?
I made a thread where I said, look at all these policies that, seemingly are unrelated. Like people have blue eyes, people who prefer vanilla ice cream, people who vote Democrat, and people whose last name begins with T. You wouldn't expect any correlation whatsoever, between those things. But look at these policies of, green energy restrictions, which basically means energy poverty, where, they don't want you to fly on airplanes. They don't want you to drive a car with a big motor. The price of petrol here, I'm in London at the moment, is I think over £7 a liter. So actually, £7 a gallon, a dollar. What is it? £1.75. Um, no, anyways, I'm messing up my math. It's something like almost $10 a gallon. Then they have a tax on a lot of countries. I don't know if the UK does, on the size of the motor in your car, either displacement or horsepower. Um, then there's the people who say that every billionaire is the fact that billionaires exist is a policy failure. You look at all these different policies; they're all designed to bring economic ruin. That's what they have in common. And if you ever argue with anybody who stands for a minimum wage, and you point out that it's impossible to pay somebody $15 if they only produce $10 worth of burgers. And first you kind of go round and round. Well, they have a right to it. It's a living wage. How is any supposed to? It's like, look, to each according to his need is what you're trying to say. And then the envy comes out. Well, if you can't afford or won't pay your workers living wage, then you deserve to go out of business. So, now we've gotten to the real root of it. You want them to go out of business. It's not about giving better jobs to unskilled people. It's about putting employers out of business. And what do you think that's going to do to wages? And so socialism, and then of course the latest incarnation, modern monetary theory, which isn't modern. It isn't about money, and it's not a theory. I mean, a theory begins with observing reality and then tries to explain it. MMT isn't that. It's basically the reincarnation of socialism with a chic new name. And again, what is it? It's about the government taking your resources to make, in a politicized decision-making process, spend them on whatever suits the body politic, which isn't a productive use. And countries that put these policies into practice get poorer. In precisely the proportion of how much they implement. You implement a little bit of it, you get a little poorer. You implement a lot of it, you get a lot poorer. You implement it all the way, like North Korea, you're at the point where you're literally on the verge of starving out.
And how does universal basic income tie into all of this? Do you think this is obviously being discussed? They've run supposed pilot tests, which of course they give glowing reviews of, that it increased people's emotional stability. People were very satisfied with it. Obviously, these were very small scale tests, not taking into account its implications on society and the economy at large. How do you see universal basic income moving forward? Are they going to try to push this? How do you think they're going to push this? And does this tie into these sort of socialist agendas that you've just laid out?
It was absolutely a socialist agenda, to each according to his need. I mean, if you didn't buy into that, then what would be the point of doling out a free monies to everybody? I love the idea they're saying it's going to make people feel happier. I mean, we're people, we're not animals, we're not pets. And they're saying this is the life of a pet. I mean, you're kept, you're fed, you're housed, you're watered, you're clothed, you're doctored, you're moved, you're entertained, and you're the passive receptacle into which these services flow from your presumably benevolent government, which is a whole nother debate. How does anybody possibly believe that the people who run the government have any benevolent intentions anymore on either side? I mean, it's pretty well documented that the left, who generally tends to believe in a benevolent paternalistic government, they realized that Bill Clinton was this incredible womanizer. They realized that Biden, there's something terribly creepy about the guy, not to mention corrupt. There's no benevolence there. The right tends to sometimes idolize their particular guys sometimes, but when you look at, without getting into too many names, when you look at what their top guys have done, it's not really glowing either. But the idea that people should be kept is just a bizarre notion. Where's the money going to come from is the socialist fantasy. So I always say socialism is really two halves. It's the magical thinking half. It's the rainbow sparkles and the unicorns and and you get free money and you get free money, and you picture the fairy godmother, Oprah, waving her magic wand and everybody's getting free stuff. Where's that coming from? Right. And, Mises was very pointed in saying that Keynes didn't teach anybody the magic of turning water into wine with this interest rate stuff. He taught them the rather more prosaic thing of eating the seed corn, and that's what these things really are. It's taking capital. There isn't enough income to pay for all this, but they can take the accumulated capital, right? And bust it out, cook it up and serve it, seed corn, and serve it as a giant feast until it runs out. And that's when Chavez miracle turns into Nicolas Maduro, whatever you call it, non-miracle going on in Venezuela right now.
So Robert F. Kennedy Jr., I want to get your take on this. I know you also tweeted about this. He recently said that he would back the US dollar with gold or other precious metals. He mentioned silver. He even mentioned platinum, which I found kind of weird. And then he also mentioned Bitcoin. So it's interesting to hear, but it doesn't seem like a well thought out plan. The fact that he threw platinum out there is confusing. What's your initial reaction to his statement?
Yeah, it's just bizarre. I just read it as a politician just saying stuff to see what gets traction. I think I could criticize some news media said his this plan, and I said you use that word plan. I do not think that word means what you think that it means. It's not a plan. It's just we'll do this. We'll do backing. That sounds good, right? The dollar is currently unbacked, so let's back it. Great. Okay, how's that going to work? Well, crickets. A big theme of mine is you can't take an irredeemable currency, which is what we have today. Every government in the world it's irredeemable. They're borrowed into existence based on full faith and credit or whatever you want to call it. You can't retroactively say, well, now it's backed by gold. And it's not a matter of quantity. It's not a matter of, well, we bought this amount of gold. In the gold standard, yes, you could always measure how much gold reserves the bank would have relative to its outstanding notes or whatever. But that was the effect, not the cause. You're reversing the horse and the cart here. A proper gold redeemable currency begins life with a deposit of gold. Somebody trusts a financial institution to bring their gold in because they prefer the convenience of the paper. And you can't reverse that cause and effect by just saying, well, we're going to declare it. All it becomes is a price fixing scheme. And when you get the price wrong, and when you get it wrong enough, then there will be this massive run. People will buy your paper in order to redeem it. And then first of all, collapse your money supply. And then secondly, drain your gold reserves until they cry uncle and say, well, it's not backed anymore. We default. And then it's over. And so this whole idea that you're going to retroactively do this, that's the belief about the BRICS currency. That's the belief about, Putin a year ago. People were saying that, or a year and a quarter ago. And now, Kennedy's saying that about the U.S. dollar. Economics doesn't work that way.
I want to touch on another statement you made recently where you said the gold standard did not fail, liberty does not fail. What fails is the thinking of the philosophers, then journalists and teachers, then we, the people. When we, the people, demand progressive, i.e., regressive, atavistic, collectivist policies, then we get them good and hard. This kind of resonates with an Indian spiritual teacher, Osho, who once stated, democracy basically means a government, and this is not quoting you, this is my own input here. Democracy basically means a government by the people, for the people, and of the people, but the people are retarded. And I always found that quite a succinct way to put it and fairly accurate in many ways. So my question is, how can we come back from where we are now? Is this going to take a complete collapse of our current system to wash away all the ignorance in society and rebuild? Is there another way? Well, what are your thoughts?
Well, before I get to what I think is the way, I just want to tackle the notion of, does it take a complete collapse? Rome at the end of the empire phase was very corrupt, and Rome collapsed. And post-collapse, it certainly wiped away all the corruption of Rome. It wiped away almost everything else as well, including almost all the population. So the population of the city of Rome was over 1 million people, and then post-collapse, it was 6,000 or 8,000. Technology disappeared. It wasn't really until the late 19th century that civilization had redeveloped, for instance, concrete that the Romans had, and the engineering marvels that they built. That today we have plumbing systems that are better than Rome's, but I think it was really late 19th century before we caught back up to all the things that were lost. So I'm not a big believer that collapse really is the cure to anything, in the same way that death isn't really the cure to disease. I mean, yeah, the disease ends when you die, but is that really, would anybody want to call that a cure? Would anybody want to go through that cure? So I think that, right, so what I'm trying to say in that tweet, and I'm an objectivist, so uh, I believe that, Ayn Rand was right when she said basically ideas come from philosophers. And, what most people say is a more colloquial, more common man version of what some dead philosopher that most people couldn't name is something he said centuries ago. And, in fact, I think there's somebody was talking about a book. It's Aristotle versus Plato. And those are the two dominant, themes that, that go back, 2,500 years at least, of one, you're basically saying, reason and logic and reality, and the other of a more transcendental, of course, philosophers have to be appointed as kings because they're the only ones who can see it accurately. To most people, all they see is the shadows on the cave wall, which is inaccurate, and all that. Whichever of those two ideas predominates determines the nature of that era. And so during the Dark and Middle Ages, it was Plato who ruled. And then we had the Renaissance and Enlightenment, and it was Aristotle. It was rediscovered, centuries earlier, but it took centuries for it to ascend to a dominant position. And now we're descending back into Plato. And so, ending the gold standard is just part and parcel of ending liberty, ending free markets, ending individualism. Ultimately, they want you to be an ant, shackled to all of your brothers, and content with your lot to be moved and used and fed and watered, but also used and abused and ultimately killed when that serves the interest of the philosopher king who's running things. And whether your flavor of it is 1984, whether your flavor of his Brave New World, whether your flavor of his Anthem by Ayn Rand, right? There are these dystopias where a very few people are basically ruling everyone else by brute force. And, the society has various ways of fooling people into thinking that this is right and proper. And so the gold standard went away because people wanted their governments to have a great deal more power. And the gold standard stands in the way of that. It certainly doesn't let them finance it the way they do today. So they said, okay, out with the gold standard. We don't like the idea of honesty, of fiscal rectitude, of tying things to reality. You can't spend more than you consume. How many economists today mock that idea and say a government is not like a household? Well, it's a large number of households, but nothing really changes, right? So they just wanted to sweep all that away. And by the turn of the previous century, the ideology had turned. It wasn't the rugged individualism of the previous turn of the previous century of 1800. It had now become what they call the progressive era, which is the biggest misnomer ever. And by that time, people were saying that, well, we want government to provide all this stuff. And of course, they were preparing to march people off to war, send the ants into the war in 1914. So that's what happened. And people say, well, the gold standard failed. No, gold was working just fine. In fact, that's why they ended it, because they regarded gold's workingness as a bad thing, protecting people from, the ravages of unsound credit, fiscal profligacy, dishonest, bookkeeping, dishonest business models. And they said, well, we want to ultimately disenfranchise people. We want to force them into that, whether they would or not. So that's what they did.
And so, how do you see the current situation being resolved? You've painted a picture that obviously a collapse is not something that we want. Does it take a change of government? Does voting even matter? Does it matter which party you vote for? Could somebody like RFK in America, despite the fact that he doesn't have such a solid plan with this whole backing of the dollar, he does seem to, at least on the surface, be for individual freedom and sovereignty? What is the solution in your mind? Do we have one in front of us, or is it too difficult to make that calculation at this point in time?
Well, I kind of want to stay in my swim lane and not necessarily comment about particular politicians. But I think that I'm not a fan of the voting doesn't matter. Voting mattered, they wouldn't let us do it. There's a cynicism and fatalism to that I don't buy into. But in a certain sense, it's right in that broadly the two sides, right? I'm here in Europe now, and they have a left and a right, as we do in America. Although the issues are different, they look at America and don't understand why we're squabbling over certain things, and Americans kind of laugh at France that they're protesting, having to have a 40-hour work week and a retirement age of 65, and things like that. But everything becomes hyper politicized. Everything, Barbie versus Oppenheimer. I mean, the ultimate and false alternative. Can you not enjoy, a sexy, successful, young woman who's the world is her oyster? Can you not enjoy that? And at the same time, can you not enjoy a movie about obviously a big name scientist who had a big impact on the world, whether you think it was a good or bad impact? Can you not watch both movies? Why does it have to be that you're sorting people into two different tribes? My tribe watches this movie, and your tribe, watches that movie. But everything becomes this false alternative. I almost think, and I'm exaggerating, but only slightly, to make make an effect here, which is take the vaccine issue. One side is like, we want to round up all the executives of the pharmaceutical companies and put them on like a big Nuremberg trial. And the other side is saying we want to force everybody to get a vaccine to the point where if we have to have the cops strap them down, to the gurney in prison and forcibly inject them. And can people not see this as a false alternative? But this is where the body politic has kind of evolved. And I don't think either side of everything, every political issue is reduced to a false alternative, and neither side is really the right one. So I think that the real solution is ultimately philosophy. It's ultimately at least a set of ideas about individualism, about reason, about economic freedom, certainly. But where does economic freedom come from? It's not, well, I have a whim to economic freedom and you have a whim to take all my stuff. So which whim is going to reign supreme? Well, let's have a big vote and find out. It's, it's my decision to control my resources, because that's what ultimately leads to, as Adam Smith put it, the wealth of nations. If you want to have wealth and success, if you want to have jobs and material prosperity for everybody, this is the only way that it works. Mises wrote that socialism cannot calculate. It's a problem with the government setting the interest rate. They don't know what the right rate is. It's not possible to know the right rate. It's not a matter of let's build a faster computer or let's give the computer so-called AI. Don't even get me started on AI. I asked ChatGPT to summarize my own theory of interest and prices. Now, what's interesting about this, if you ask, if you study Mises, I have, and you go and say, summarize Mises, and then you think you got something wrong, there's always a possibility that, okay, maybe I misremember Mises, or I misunderstood him, or whatever. But if I ask it to summarize my own theory, presumably my own opinion about my own theory is authoritative, and anybody who agrees with me as to what Keith Weiner said is almost by definition wrong, right? Anyways, it gave me a whole heap of rubbish that it was just, it pasted together a lot of different other people's ideas and attributed them to me. I would also say I have a published book, or I've written books or something like that, which I've not done yet. But anyways, people have to, remember or rediscover why the individual is the unit in society. It's not that we're a collective of ants. That works for the ant kingdom. That works for bees. That does not work for people, because we have individual minds, we have individual consciousness, we have individual reason. Reason only works at the individual level. To the extent I'm saying something, I can't do anybody's thinking for them. You have to listen to what I say, evaluate every word, and decide whether every one of those words is right or wrong. And then only when you decide it's right, integrate it into your, to the rest of your thinking. And then ultimately, each person has to live for himself, because if I eat, I'm not hungry anymore, right? This is kind of the theme of Anthem. What do you mean we're hungry? We've eaten. And you've lost the precision to be able to say, well, you ate, but I didn't, because everything's we. We. Well, it's not a we, it's an I. And, the world is fighting on the precipice of that I versus we, debate once again. The, intrinsically revealed or subjectively invented versus objectively true. And so there we are. And I don't have any influence over that, but to the extent I did, I would say to everybody, you've got to think about these ideas. You've got to promote these ideas. It's not about whether you like Kennedy better than Vivek Ramaswamy. I guess he'd be the alternative outsider on the Republican side, and Kennedy would be the alternative outsider on the Democrat side. It's not about whether you like one of those guys better. On election day, go into the voting booth, and if you have the stomach, hold your nose and pull the lever for whichever guy uh, offends you least, I guess. But that's the other 364 days out of the year. What are you doing, and what are you fighting for? It's not. It isn't sufficient to fight against something. The right is so about being against the left that I don't think that works. You have to be for something. What is it you're for? Can you articulate a vision of that? Are you for the individual, or are you for some slightly different flavor of collectivism? Anyways, I'm just rambling here, and I don't know.
No, that's very well said. And I actually do want to get your thoughts on AI in a moment. But first, I wanted, part of the fundamental problem when it comes to money and how it's viewed by society at large is that we do not see money and the monetary system being taught in schools, which it obviously should be around the world. Yet, perhaps this is by design. Some people would point to that, the powers that be don't want everybody, paying attention to the monetary system and the way that it's operating at the moment. But my question is, what do you think is the best way to start for parents who want to educate their kids about money because the school system won't do it?
Wow. Um, I mean, I guess with a kid, it's important to touch and hold things physically. Touch and hold a silver coin, and if you dare, let your kids get their paws on a gold coin. Um, the interesting thing about holding a gold coin, I hope everybody in your audience has actually held one, and ideally one of the ones like a maple, which is actually solid gold, and not an eagle, which dilutes the point because an eagle is only 93% gold, and so an eagle is bigger than it would be for the same weight if it was solid gold. But the maples just have this density. When you hold gold, it's much, much heavier than you think it has any right to be. If you take a gold bar about the size of an old iPhone, the small factor one, that's a kilo if it was solid gold, 2.25 pounds. Um, and okay, you can hear that intellectually and register that, okay, gold's really dense, it's really heavy, okay, fine. When you hold it, there's a tangible reality to it that you begin to realize what every other metal, and certainly including lead, iron, copper, brass, it just feels cheap and insubstantial by comparison. And there's something, I don't use the word intrinsic because it's not intrinsic to the gold, but there's something about the nature of human consciousness that has always been attracted to gold. If I find if somebody's talking about money or gold and holds up a gold coin on the stage, I'm sitting forward in my chair. There's this unconscious attraction to it, and I think, I mean, depending on what age of child, but if you're talking 5 or 7 years old, it reminds me of let's say you have a spelling bee for first graders. You can ask them to spell the word is, but what an unfair trick question to define. To give the definition of the word is. I mean, a 5-year-old or 7-year-old can't do that. And you think it's a really simple word, right? Which they use every day, but they can't define it. You kind of have to get to the college philosophy level to define, the verb to be. And probably most of them couldn't really do a very adequate job either. I think it's the same thing with money. Um, I dispute with PhDs in monetary economics about the definition of money. So I say the definition of money is the most marketable physical good. After Karl Menger, the founder of the Austrian school, that's how he defined it: most marketable commodity. Marketability being the measure of your loss to trade in and out of it. Why does that matter? If you're using it as the intermediate trade in a barter, the wider that spread, the more you're losing, the less attractive it is. The more time you're going to spend looking around for somebody who wants it, the more marketable it is, the least, you have lesser losses, which is really what it's about. And also define it as the extinguisher of debt, which the dollar cannot do because the dollar is a debt instrument. We pay debts using dollars, which are IOUs. We're paying debts using IOUs. We've shifted the debt. We haven't actually extinguished it. Those are the two things that make money because it's a physical good. We're a physical being who live in a physical world. Bitcoin is a virtual thing in a virtual world, and that's fine as an instrument in a way, but it's not the final settlement. Final settlement is give me something physical. We use the expression, take my marbles and, leave the sandbox. And I guess every 5-year-old, maybe they don't play marbles anymore today, but every 5-year-old who's ever played marbles, in the sandbox in kindergarten understands that when there's a kid who seems to be cheating or seems to be really good at it or a bully or whatever, you just pick up what's left of your marbles, put them in your pocket, and leave. And that's a necessary and important feature of a monetary system. And so I encourage people to just think about and ask these questions. And obviously, my writings, I, as far as I know, I'm kind of one of the only ones really on this wavelength. There's a few others that touch on, a lot of the topics in a way that I find agreeable. But in terms of making money a science, that's what I'm trying to do.
So, as I mentioned, I do want to get your thoughts on the AI craze, both in the stock market, with stocks like Nvidia seeming to keep ripping higher, and in the media, where it seems it's constantly being pushed as both an innovation, a potential danger that could change humanity. What if AI learns to figure out how to manipulate humans? Apparently, it's started to be able to lie now. You pointed out with ChatGPT that it's not really this miracle sort of program that a lot of people are making it out to be. Is AI the flavor of the month, or is this going to be a significant force in the world, in your opinion?
Well, there's no doubt that as a tool, it's a very general purpose tool. It has a lot of applications. And, everybody's familiar with, I guess, two so far, so-called stable diffusion image generators and so-called large language model, general purpose chat modules or whatever you want to call them. And there will certainly be others. You can't dismiss that. It's like every other tool or technology that's ever been invented. It never really goes away. I like to use the example, and I was there at the beginning of the PC revolution. And what really, so IBM had a PC, but, before them, other people had, and of course the PC was very expensive in those days. It was $3,000 or $4,000 at that time. There were other things of similar or even cheaper. But a really pivotal event happened, which was, I believe it was Phoenix Technologies was the first who cloned the IBM BIOS. That's that basic chip that when you first boot, actually they kind of obscure it now with the Dell logo or whatever, but it used to say Phoenix BIOS, Award BIOS, AMI BIOS. And they did a so-called clean room reverse engineering, where they had a group of engineers study and reverse engineer it and put together a set of documents that then the lawyers scrubbed through to make sure there wasn't anything that they gave away any of IBM's secrets other than how the interface worked. And then a second team who didn't know the first team, had only the documentation, then built their own BIOS that was compatible. And then they were able to make a PC that was compatible and it could run all IBM software because it had the same BIOS in it. Not copied, but a re-engineered version. And so at that time, the BIOS is where the value was. If you had your own BIOS, you were king, and if you didn't, you had to license that and pay for it. BIOS never went away. I mean, I'm on a Microsoft Surface now. There's still BIOS in it. It's just what happened is other layers were built that add more value at the higher layers. So first was DOS, or disk operating system. Then there was Windows, which subsumed DOS, which subsumed essentially BIOS. All the other layers, and now we're in a web browser kind of world where everything is HTML5 or JavaScript or whatever technologies that each layer commoditizes the layer beneath it. And so I think what's going to happen is AI commoditizes other things, for instance databases, because what you really want in the database is the insight. and the so-called AI will maybe give you the insight. So the database doesn't go away. There's still a SQL or a NoSQL database underneath it, but maybe there's less need for the fewer people will have a need to get into the database raw. They want the AI to glean whatever insights out of it. And so what happens is everything, below kind of gets tamped down in terms of the value. It's still there, but it's devalued a bit. It's commoditized. And I think that absolutely that's going to go on. But I don't believe the whole premise that AI is intelligence, that AI understands anything, let alone has any kind of volition or intent or free will to it. It's just preposterous. It's an algorithm. It's programming a computer with a series of if-thens and add, subtract, multiply, divide. But it's done in a very clever way. So yeah, I think it's going to change how we work. Every company is looking at it. Okay, how do we use this? It's about making better decisions ultimately. So if I get an insight, if I can ask an AI to summarize, 10 petabytes of data and give it to me in a useful form, I can make a better decision. Absolutely. But is it going to take over the world? Is it Skynet from the Terminator movie? Hardly.
So I want to end with your thoughts on the gold and silver markets. And I wanted to pose the question to you: do you look at technical analysis when examining the gold and silver price? Do you stick to fundamentals? And, obviously you're a believer in the precious metals as money, but you're very measured and you don't fall into the camp of a lot of gold bugs who are always proclaiming there's a new all-time high just around the corner. So I wanted to ask you that question about, do you look at technicals? Do you stick to fundamentals when examining the gold price? And what's your view on gold and silver prices and where you see them headed?
I don't really pay too much attention to technicals. I have I guess I can't really call it a theory, a hypothesis I'm working on, and that is technicals will either be more or less relevant in a market depending on essentially the size and depth of that market and how many other traders there are that aren't looking at. So, looking at the technicals. So, let's say you're in Bitcoin, everybody's looking at the technicals. I mean, it's a trader's market. Um, and so you'd expect the technicals to be more revealing of what's going on there. Gold, there's billions of people in this world who own gold. Every day in every private boardroom and every, Swiss private bank and wealth group in Zurich and Geneva, there's somebody setting up an intergenerational trust for planning purposes. They all have gold going into them, and it's not really a function of price. So I think in gold, the charts are probably the least revealing of anything going on. And anyways, I'm not sure, but I mean, there are patterns in the markets, no question, but then the patterns change, and I'm not sure that anybody ever became a billionaire purely trading technicals. So, anyways, I'm not in it to trade gold like that anyway. I don't think of gold's value in terms of how many dollars it'll buy. Um, I'm a believer, and obviously I built a company around the proposition. It's really about how much gold you have, not how many dollars that gold would liquidate for. And so we pay interest on gold. That's what monetary metals does. Um, so we study what we call the fundamentals of gold, which is really at its essence a pretty simple idea. It's a spread. It's futures minus spot. And you think, okay, well, why is that? Why does that spread matter? Well, if I want to buy gold, I can buy a futures contract or I can buy a bar of gold. Now, leaving aside that a lot of people would say the future is so-called paper gold, it doesn't exist. It's a pure fraud. It's just to shunt demand away. That if people couldn't buy futures, they would have to buy physical gold, drive the price up. The government doesn't care about the price of gold. That's number one. And number two, there's a lot that's wrong with the financial system. Don't get me wrong, but it doesn't generally operate that there's a giant and simple fraud. That's not how things work. If you commit fraud, I don't care if you're a big bank or a little bank. Eventually, you get caught. Madoff was a very, very, very big name. I mean, he was Mr. Nasdaq, one of the founders. He was on the board. He's very well known to the regulators. He was a big, big, big guy. He rotted his last few years in prison and died in prison. That's not how it works. So if you take a look at futures on a spot, it gives you a spread. And when you annualize that as a percentage, that's the basis. And you can compare that to any interest rate, such as LIBOR or SOFR, or whatever. And in general, when that basis is high and rising, that means that the marginal demand for gold is to go into a carry trade, where somebody borrows dollars, buys gold, and sells a futures contract against it. And the wider that spread, the more profitable this trade is. The more people will be doing it, the more that the spread should come in. But if you see the spread widening, that means that gold is becoming more and more abundant. It's so abundant that its marginal use is to go into the warehouse because there's no other better use for it. And when you see that spread coming in or even inverting and going negative, then that means that gold is coming out of the warehouse, and it's physical gold is in high demand and rising. And so that's what we study, and we publish it's broken at the moment actually, because we've been basing it on LIBOR, and they're phasing LIBOR out, which is a whole other problem. I can go rant about that. That LIBOR is an unsecured lending rate between banks. So if LIBOR is spiking, that indicates either interest rates are spiking or credit stress in the banks is increasing. They replaced it with SOFR, which is secured overnight funding rate. It's secured. You have to pledge collateral to be eligible for SOFR. And so SOFR, what they've done is they've tamped down the signal of bank stress by replacing LIBOR with SOFR as the big benchmark that everybody's supposed to quote, which is a huge problem, and it's part of the dishonesty of how the system operates. But anyways, so our thing is broken at the moment, but and we're going to work on fixing it. But what it's doing is it's looking at in the futures market, in the gold market, you have leveraged speculators that come into your futures. And because they can use very high leverage, they can, at least temporarily, move the price around a fair bit. So our fundamental price is a calculation attempting the following. And I preface this by saying all models are wrong, some models are useful. So that's my preface to our own model. And that's George Box who said that. Our model is attempting to ask the question, what if you backed out the effects of the speculators? That because they're using leverage, picture you have two pins and there's a rubber band between the two. And sometimes the speculators are really bullish and they're pulling up. Sometimes they're really bearish, they're pushing down. What if you could take that tension out and have the rubber band just straight between the two pins? Where would that level be? That's what we're attempting to calculate. And that's the fundamental price. And then, of course, there's the macroeconomics that says this is where we think things are likely to go, and and for what reason. And I think the prices, particularly of gold, silver, certainly could slingshot off of it or not, because silver is subject to tends to be the choice of wage earners. If you're setting aside 10% of your weekly wage, it's silver. For physical metal, it's silver, much more than gold. And so as the wage earners find another downturn, I think likely to come soon, and more layoffs and other things, not to mention higher cost of living, the wage earners may not be in a position to continue stacking as much. But gold is a capital asset, and it trades off against other capital assets like real estate and equities. So what's going to drive the price of gold higher? It's fear of exposure to a rotten banking system. I mean, two of the biggest banking failures have occurred, in recent months. And I don't think anybody believes, not even the people who so glibly say everything's fine, I don't think anybody really believes that risk has been fixed or removed. I mean, we papered over it. We said, okay, a bailout for everybody, including people that were over the $250,000 FDIC limit. Okay, but now what? I mean, how do you fix that? Well, the banks are insolvent because rising interest rates has done two things, both of them negative to banks. It's increased their cost of funding. Banks borrow short, which means all their funding rolls over, and if the interest rate goes higher, their cost of funding goes higher almost instantly. And it's pushed down the value of their assets. So they're insolvent. And that doesn't go away until the interest rate reverts to its falling trend. But, you could see a lot more victims of bankruptcy, in the meantime. So I think a lot of people are eyeing this very uneasily. we certainly get a lot of inquiries saying, okay, and how do I use gold to avoid this exposure? And because if you own a bar of gold, gold does not default. That's one of its virtues. If you own a bank deposit and the bank defaults, then you're waiting, you're holding your breath, waiting for Janet Yellen to say, "We will give you a bailout and you a bailout," and and maybe they do and maybe they don't. You can't, just because they bailed out the last group doesn't mean they owe you a bailout. Maybe they will, probably. It's hard to imagine, in a certain sense, hard to imagine what would happen if they didn't bail out the depositors. But on the other hand, it's also pretty terrifying to think, what if they bail everyone out? When does the government run out of credit to be able to do all this? So, if you want to opt out, gold is the opt out mechanism, and there's never been more compelling reasons to opt out than there are today.
Well, that's a great segue into monetary metals. So, for those unfamiliar, could you tell us about monetary metals and how it works?
So, we're trying to bring back the use of gold to finance productive things. That's ultimately where we all consume things, but those things have to be produced, those things have to be financed. So we pay interest on gold. So people deposit gold with us, we pay them interest on it, which means it's not about selling your gold for more dollars. If the whole story is don't own the dollar because either the dollar is going to hyperinflate or the dollar is an unsound credit, so you buy gold, why would you want to sell the gold to get dollars, which you just said a minute ago were rubbish? But you want more gold. So if you deposit the gold, and if we're paying 3%, then give us 100 ounces. At the end of the year, we give you back 103 ounces. And so it's just a different model. It's a paradigm shift. Some people are like, well, what the hell's the point of that? Gold's going to be $50,000 by tomorrow morning. Okay, well, if you really think that, then you probably shouldn't open an account. You shouldn't participate. If you think that, the price of gold can go up and down, but meanwhile, it's better to accumulate ounces rather than to pay storage fees, really, then what we're offering makes sense. So we're financing, two kinds of trades. We're financing businesses that have physical inventory, like mints and refiners and jewelry manufacturers. We finance, a lot of your readers may be familiar with the Goldback, which is manufactured by Valorum. So that manufacturing process uses a lot of gold that doesn't ultimately even end up on that Goldback unit. And so we finance them. And this is a lease. In a lease, the title remains with you, the owner of it. It does not become a credit, does not go on balance sheet of the lessee. If the lessee declares bankruptcy, it's still your gold, not their gold. Interest rates on leases are 2 to 5% to the investor. The other thing that we do is gold lending, not for companies that have gold inventory, but for companies that have a gold income, such as mining companies. So the last bit doesn't necessarily, they have to finance themselves with equity capital to buy the property and do all the drilling and the exploration. You can't borrow money to do any of that. But when you get to the point of, okay, you're ready to go into production, you need to buy a plant and start going, we can finance that. We lend them denominated in gold. And again, the investors get gold in return. And the interest rates there will be kind of mid to high single digits to about 20%. The last one we did was 19%. Obviously higher risk. I mean, you can't compare that to a lease. And we're very upfront in saying, yeah, there's risk here. This is not risk free, but the return is what makes it interesting. My economic theory, when I was studying before I founded Monetary Metals, was that its interest is the only force that will draw gold out of private hoards and into the market. It's the promise, credible promise of interest, and so that's what we do. And the thing's growing, very rapidly, and I think it makes sense for this economy. People need a return on their money. That's a universal human need. But in dollars, you couldn't get a return until last year, and now you get a return. But how fast is the dollar losing value? And are you, running faster and faster up the down escalator? And you're getting a 5% return, but how fast is the dollar losing its value? Is the question. If you're getting interest in gold, there's no question that gold can't be debased. So it is what it is.
Great. Well, I'll put a link in the description below to Monetary Metals for people who want to check that out. And thanks so much, Keith, for coming on and sharing all your knowledge with our audience.
No, thanks. This has been a good conversation, and hopefully I added value.
Commodity Culture is a series on commodities and natural resources. If you would like to see more, be sure to subscribe and hit the bell notification so you're always up to date with the latest episodes.